Today, we're diving deep into SoFi Technologies, ticker symbol SoFi, and unpacking what might be one of the most underrated setups in the fintech space right now. We've seen SoFi stock sell off after a red-hot earnings run, thanks in part to a surprise $1.5 billion share offering. But beneath that short-term price pressure, there's something quietly building that many investors might be missing: crypto. That's right, SoFi is making moves to re-enter the crypto space. And not just with basic trading, but with a broader strategic roadmap that could transform the company's growth profile and diversify its revenue streams in a big way. So in this video, we'll break down what's happened to the stock lately, why the $1.5 billion offering caused such a sharp sell-off, what SoFi's crypto expansion looks like, and why it matters, the upside, the risks, and what smart money could be seeing that retail might be missing. Let's get into it. Let's start with what happened this week. Earlier in the week, SoFi posted its Q2 2025 earnings, and the numbers were strong. Revenue came in at $858 million, up 44% year-over-year, and beat Wall Street expectations. Adjusted earnings per share came in at 8 cents, again beating consensus. Even more impressive was the user and product growth. SoFi added 850,000 new members, bringing its total membership to 11.7 million, and rolled out 1.26 million new products, pushing its product total to over 17 million. This is a company that's scaling rapidly, and for the first time in its history, it's doing so profitably, with GAAP net income of around $97 million and adjusted EBITDA up 81% year-over-year. On paper, that should have been a catalyst for a sustained rally. And initially, it was. The stock surged as high as $25.08 intraday. But that rally was cut short, fast, by the announcement of a $1.5 billion public share offering. The offering was priced at $20.85 per share, and included nearly 72 million new shares, with underwriters granted the option to purchase even more. That sent the stock tumbling. By the end of the week, SoFi posted back-to-back daily declines, erasing nearly all the post-earnings momentum. So what happened? Why would a company drop like that after such a strong report? It comes down to dilution. When a company issues new shares, it increases the total number of outstanding shares, which reduces the value of each existing share, unless the capital raised creates more value than it dilutes. In SoFi's case, this was about 7% dilution, not small, but not crazy either. What really matters is why the company raised money. And this is where things get interesting. SoFi didn't raise $1.5 billion because it needed to plug a hole. The company is profitable. It has a growing deposit base. It has lending capacity. No, SoFi raised capital from a position of strength. They timed the offering right after a strong earnings beat, and right after a sharp upward move in the stock. That's a strategic move, not a desperate one. And that begs the question, what are they planning to do with that money? Well, part of the answer may lie in what hasn't gotten as much attention in the headlines, and that's SoFi's renewed push into crypto. Here's what we know. SoFi has confirmed it's reintroducing crypto trading and investing by the end of 2025. That means users will be able to buy, sell, and hold major cryptocurrencies like Bitcoin, Ethereum, and even stablecoins, all within the SoFi app. But it goes further than that. SoFi is also exploring blockchain-based remittances, particularly cross-border payments. They've hinted at future offerings around crypto-collateralized lending, staking, and even integrating crypto into SoFi's broader financial ecosystem, from saving to spending, investing to borrowing. In other words, this isn't just about offering Bitcoin to keep up with Robinhood or PayPal. This is about embedding crypto into SoFi's long-term infrastructure. And here's the kicker: SoFi is uniquely positioned to do it legally and at scale. Unlike most fintech platforms, SoFi is a nationally chartered bank. That means they're subject to federal regulation, and have much broader permission from agencies like the OCC, the Office of the Controller of the Currency. This allows them to engage in things like crypto custody, stablecoin services, and remittance using blockchain rails, in ways that non-bank fintechs can't. So while others are trying to navigate state-by-state regulatory hurdles, SoFi can potentially roll out a national crypto platform, fully integrated with a user's savings account, credit card, and investment portfolio. Now let's talk about why that matters. First, it opens the door to a younger, tech-savvy demographic that already overlaps heavily with crypto. SoFi is already strong with millennial and Gen Z users, and this move makes the platform even more attractive to them. Second, It allows SoFi to diversify its revenue streams. Currently, a big chunk of revenue comes from lending. Crypto trading, yield, and remittance services bring in new, non-interest income, which is vital in a high-interest rate, unpredictable macro environment. And third, it gives SoFi a chance to capture market share at a time when crypto adoption is rising again, but user trust in pure-play crypto platforms has been damaged by past scandals. SoFi brings something that others don't: trust and compliance. If you're a user who wants access to crypto, but also wants to feel protected, SoFi might be the platform you turn to. Of course, there are risks. Crypto is still volatile. Regulations could shift again. And there's no guarantee users will adopt SoFi's platform over more established crypto exchanges. But if they execute well, SoFi could become the first major US bank to offer a full-stack crypto experience, and that's potentially huge. So how should investors be thinking about this? From a short-term standpoint, the stock has pulled back. Some investors saw the dilution and sold. That's fair, it's part of the game. But from a long-term perspective, this offering could be the funding event that enables SoFi to launch its next wave of growth. If crypto adoption picks up again, and if SoFi becomes a key on-ramp for that adoption, the earnings multiple on this stock could expand dramatically. Right now, SoFi trades like a growing but somewhat conventional fintech. But if you layer in high-margin crypto services, you start to approach platform company territory, with far more upside potential. In that sense, this current dip might not be a warning sign. It might be an entry point. Let's recap. SoFi beat expectations across the board in Q2. The $1.5 billion offering caused short-term pressure, but looks strategic. Crypto is back on the roadmap, with real regulatory backing and integration potential. Smart money might be looking at this not as a red flag, but as a setup for the next leg higher. So, what do you think? Is SoFi stock setting up for a major crypto-powered breakout? Or is this all too speculative in a market that's already volatile? Let me know in the comments. And if you got value from this video, hit that like button, subscribe, and turn on notifications. We cover growth stocks, market movers, and emerging tech, and you won't want to miss what's coming next. Thanks for watching, and I'll see you in the next one.